So with respect to inflation, we've been hearing all sorts of prognostications from last year. It was supposed to be short-lived and temporary, and now we're, a year and a half out, and it's still high, and they're not really sure where it's going. So what are your thoughts on that, and where do you think interest rates might be going to combat that, given the central bank policies at this point?
That's, again, the $64,000 question, isn't it? The word transitory always rolls around, and if it stays around for a long time, by its very definition, it's not transitory anymore. Inflation is a problem. There is absolutely no doubt about that. But one of the things that we look at, we're kind of the opinion that we've passed peak inflation. We follow a couple of indicators that, at the very base level, we go through and we ask purchasing managers and company managers, are you going to be buying more? And that kind of gives you an idea where they're going to be at growth next month. And then we also ask them, do you expect to pay more next month? And all our indicators are suggesting that even though at an absolute level inflation's high, it's actually rolled over the rate of growth at which. So we're past that inflection point. The market's a discounting mechanism. So what ends up happening is, 6 months out, when we're looking at what we've called this market cycle clock, where growth and inflation are, the markets actually are quite firm, typically speaking. So when I'm looking to balance the portfolio, I'm not concerned about what's going to happen for the rest of October or the beginning of November. I'm looking for March. And in almost to a man, purchasing managers are saying, we're going to be producing more and we're going to be paying less for that, given what they've most recently had. So, I think inflation is still going to be a problem. The issue that I have, and we were talking with some of the other advisors last night, is we've gone through a massive rate increase cycle, like massive, unprecedented, and all those effects haven't worked their way through the system yet, and still they're going to increase rates more. So that's back to the original question about valuations on stocks and stuff. That's the uncertainty, that's the battle that's going on in the markets right now. At the end of the day, markets will find an equilibrium. I find, capital markets are very much like water. It will find a leveling spot, and you just got to let it do what it does. And this is where you sit back and you buy good quality companies, and they'll work their way out. You just got to kind of ride it out. I know it sounds condescending and patronizing, but at the end of the day, this is why you're there. And this is, companies. The best way to combat inflation is not only equities, but it's companies that have strong free cash flow growth and are growing their dividend. And that's what we're doing. So it becomes almost a moot point. As long as you're growing your dividend faster than inflation, you're still making money.
Yeah, so here, I guess some good news potentially is that, inflation looks like it's rolled over. There's a lot of data points that you're looking at. And, one of the ways you're combating the inflation in the portfolio is, buying companies that have strong free cash flows and are growing their dividends faster than inflation. Mm-hmm. So obviously, I guess if you're making more money than the inflation rate, then that's obviously going to be a good thing. And equities traditionally have been the best inflation hedge.
Yep.
Longer term.